welcome everybody to the, I don't know, what should we call this? This slippery, sloppy market? What do we call this thing? Because it's I don't know about you guys, but it's getting aggravating watching it just every day.
Slippery, sloppy. Yeah, that sounds about right.
We'll leave the marketing to you, Mike. We're just here to trade the moves.
Yeah. So okay. So I just put a chart of the SPY on the screen. No, this is our friend SanDisk. We will talk about SanDisk because I do have a confession to make with SanDisk, which I'm not proud of. But okay, this is a daily chart of the SPY, and I'm not a technician, but to me this looks like shit. Like, how would you guys describe it?
Crap.
Yeah,
Can't recognize pattern.
That's one ugly chart with your one random arrow in there and no moving averages. Even the colors are ugly. The white background. Can we do better than this chart?
White background makes it easy to see.
Yeah,
I can't remember seeing
too much. You're zoomed in too much. You don't have any moving averages to smooth out the trend.
Oh, here we go. All right.
But you're zoomed in too much. That's what it is. But yeah, it's an ugly chart and it's called crap. Can't recognize pattern, basically.
I've never heard that one before. That's good. I gotta save that one in my mental bank.
Okay, crap can't recognize a pattern. That works. So we have a title for today's episode. Okay, so like, does it? We've had this conversation 28 million times, especially like since December. We've been trading in basically a 3% range. Even with all this news, oil going up 31% in a week, the market's still stuck.
The IWM broke down today, but yes, it is really, the market is still stuck. We don't have any more clarity, to me at least, than I did a week ago or 2 weeks ago. So it's just stuck. For now, it's stuck. And that's what I think. I think the more, like, the IWM broke down today, and the more we base under the moving averages on the daily chart, the more likely we are to roll over. The SPY is starting to roll over. The Qs rolled over and then got bought. So we are stuck. That's a good description, really.
Okay, but the fact, is it actually bullish, though, that we haven't died? So the market's had every reason to flop over. You could go, okay, we've been this many years since the bull market started. It's whatever it is, year 2 or 3 of a new presidency. You can make cyclical arguments. Now we have oil going through the roof. We have war. Like, is it actually bullish that it just hasn't crocked or croaked?
Could be. Who knows? We'll find out.
I would argue that every passing day that goes by where we don't break down and hold some breakdown levels leads to a higher probability that we actually eventually break up. Time overall is a bull's friend. You could look at the daily chart of the S&P or the NASDAQ and basically say, hey, this is one gigantic bullish consolidation. We had been very extended. The 200 SMA has been slowly catching up through time to price. We still have the first half of March, which is basically one more week left, which is a period of bearish seasonality. But March 14th usually marks a major pivot low. And the thing that I think is, so I could point out things for bulls and things for bears right now. I could come up with some reasons why we could break down and some reasons to break out. But a reason why we may break out soon if we don't break down is because of the relative strength that we're starting to see again in the NASDAQ. The NASDAQ is what was initially weak to end January and to begin February, and they were running up like consumer staples and utilities, and there's no growth in consumer staples, so you just had increased multiples in consumer staples. That's not going to last. NASDAQ, that is where the meat of the market is. That's where all of the major market caps are, and you got to keep in mind these are market cap weighted indices that we're looking at. So if the NASDAQ relative strength continues, if NVDA, as an example, begins to break higher out of its consolidation, which it did have a really good earnings report, I know that they sold that down, that's what's going to lead us to breaking higher. So continuing to watch this relative strength in the NASDAQ, but I also do still think that we have a solid week or so to let this market break lower. And if the market breaks down, I think at some point, if the bottom falls out of this market, which just hasn't been able to happen, every big gap down, including today's, people are coming in and they're monetizing their hedges, they're monetizing their puts, and you're getting a bid. If the bottom really falls out on this market, it's going to happen very, very fast. It's going to be a really fast down move. But I honestly also think eventually it leads to a viable dip. But if we can't break down by the end of next week, the NASDAQ's going to lead us to a break higher. So there's a window of time here in my mind that we still have to be able to break lower. Maybe the IWM and the RSP are foreshadowing something here. The RSP is also failing. It's back below $200. So let's see what happens here. This SPY 675 to 676 area, which the last hour or so we've been trying to hold as resistance, is a hugely important level. Do we close back above that today, or do we close below it? I think that it's a Friday with geopolitical concerns that we roll down into the close, and that potentially triggers the beginning of this sell-off. But if it doesn't happen by next week, forget it. We're going higher.
We've heard that story before. I mean, no disrespect, but I mean, that's the thing, is that the market continues to do whatever it wants. Right now, I normally would agree that the longer basis, the more likely it is to go higher. But if you look at the SPY and the IWM, that kind of base is not bullish. It's starting to roll over. But again, really, I don't know either. So I'm just gonna wait and see. The SPY, if you want the SPY, if you want to look for, if you think we're gonna get a weak close today on the SPY, probably now is the time to short it, as it's coming off the declining 20 on the 15-minute chart, off the high of the day. So
100%. And I'm still pressing the short side. And I think that the high from 2 trading sessions ago is our first like real potential lower high in this market. That we snap back from that kind of false breakdown on Tuesday, but we just got a lower high and now we're retesting those lows. So if we can really break down into the close and break Tuesday's low, then the SPY is giving us a lower high and a lower low, and that is obviously really notable because that's different than just the sideways price action that we've seen for 3 months into this.
Okay,
yeah.
So does the news flow impact how you're thinking about this? Because we could walk, because we have 3 days, we got Trump in the White House in a war. So like he's made clear or at least it looks like he wants to ride this out as long as it takes. Like on the flip side, you know, we could get one of those messages from him. Just had a call with Iran. Great guys over there. We're going to make a deal. Like, I feel like that always looms on top of everything. Also, that Trump is just a wild card for every situation like this.
For sure, but he's too far down the rabbit hole that there's no coming back from this. I don't think there is going to be, oh, yeah, we made a deal. I'm not sure. I doubt it, honestly.
Yeah, but the way that Trump rolls, he'll say that there's a deal, or he'll say that we won and it's over, whether it's true or not. Just, yeah, you know, I saw the market went down and oil's going up and everybody's getting mad and I might lose the midterms. So guess what? The war's over. We won. They're begging me for a deal. And you know what? I said, all right, I'll give you guys a deal. I'm going to have a little mercy on you guys. And that's it. Whether it's true or not, that's just 100%. That's just 100% how he rolls. And I don't think that he can have a protracted military conflict with Iran going into the midterms. It's not going to end up. It's not going to go well for him. I don't think. So he at some point I think is going to declare something. The question is, does Iran let him pull out? You know, because if they keep attacking us, all bets are off. But you know, we'll see how it plays out. But he's going to have to pull out at some point.
Okay, but all right. So let's look at the price of oil. So crude is just, it's not taking a break today. You know, just hit 90. It's at like RSI's multi-year highs. Does this kind of feel like the market's just bracing for more bad news?
No, so remember you asked me, you told me about, don't mean to put you on the spot here, Mike, about USO being toppy. I said it's not ready yet. So that's what I think right now. It's not ready yet. We don't have the signal to be betting against it just yet. But the more it goes up, the more likely, the closer we are to a top. But we don't have enough information to be betting against it.
Yeah,
That's my take.
No, 100%. I thought oil was topping out either yesterday or the day before. I was messaging with Sami, and it's like, listen, I'm long oil stocks too, and I thought oil was getting out of control. So, and now it's probably up another $15 since then.
I started a small oil short today. It's small. I'm recognizing it's possible for this USO to go to 120, 125. I do think it's possible. There's no signal yet on the short. When I get a signal, that will be the reason to size up on it. But into this degree of extension is oftentimes where I start implementing kind of a small build-in process on some of these types of trades. And at this point, the thing is extraordinarily extended with today's 11% gap up. So I have started a small build-in process on USO short, DBO short, and SCO long. So I've got exposure from 3 different spots right now, but none of those positions are massive at this point, and I'm getting a little bit bigger and a little bit bigger as they move against me, just because the extension is getting extreme. And it's also something that I think that Trump is going to make an announcement about at some point. It's another thing that he can't allow to exist if he wants to win these midterms. I think that's all he cares about right now is winning the midterms.
Okay, let's talk a little bit about sectors. So like Derrick said before, like the utilities, consumer staples have gone wild this year, up huge. Like, is there a safe haven sector anymore? Because, like, all right, hypothetically, if you think the market's going to crap, like, you could short, right? You could sell what you have, but, like, are there any safe haven sectors or even individual stocks? Because it kind of feels like everything is stretched to some extent, except for
gold
like
is
crypto.
pretty bullish. Gold is pretty bullish, but the truth of the matter is, most of the time, if we have a market-wide, sell-off, most of the time, all assets get sold. So you're just better off staying away, because you just never know when the sector that you really like, that was holding really well, that you thought was going to go higher, will actually just follow the market. So the vast majority of the time, all asset classes get sold, including Bitcoin, including gold. But right now, I do recognize that gold is holding up really well.
All right, let's talk about our good friend SanDisk. So I have to confess, I might have to resign as president of Team SanDisk because I put in a stop, which is physical evidence of some doubt. And I mean, it seems like it's holding in okay. Like, this doesn't look pretty to me, but not a disaster either.
If it breaks today's low, it will be a disaster. I think if it breaks today's low, which is 5, and breaks it and closes below it, I think for sure we're headed to like 450 or so, to the 20 on the weekly. It's just holding up remarkably well. It's like insanely strong for some reason, even though the weekly chart totally rolled over. But since today we have a narrow range bar, I'm thinking maybe next week, if we break under it and close below it, that should do it. But we'll find out. We'll see. We'll have to wait and see.
All right. I know Derrick is sitting there. He's praying for me to lose money. I know, Derrick, I will message you if my stop gets hit. You could get yourself a little birthday cake or something. But you've been a SanDisk critic. So what do you think's going on?
Yeah, so I noticed that Mr. SanDisk 1000 didn't make it to our little meeting of the minds today. Right as this thing is below 600, rolling over, making a lower high, a lower low. There is still some relative strength there. I agree with Sami, but the composure of the stock changed, and this is why market dynamics are so important. The composure of the stock changed when WDC said that they were coming out and that they were going to sell some additional SanDisk shares. And then that weighed on the stock, I think, in that last attempt higher into $700, really like that day after it rolled down very heavily. So at the end of the day, a lot of trading is supply and demand. And if all of a sudden there's a lot more supply because WDC dumped stock, then if the demand stays equal, the stock goes down. That's just kind of how trading works. And that's why it's important to pay attention to things like secondary offerings and corporate buybacks and stuff like that. It has massive effects on the bigger picture of individual stocks and on markets. So I'm honestly, I'm not a massive bear on SanDisk. The target that I have had for being short this thing is $500. And it's gone more than halfway there since I first started shorting this thing.
I think if we break down, I mean, we break today's low and close below it, we're headed to the 20 on the weekly. It's at the moment it's at 400, but the moving average, catches up with price. So I'm estimating it'll be about 450 or so on SanDisk, maybe 400, but it will need the market to cooperate, probably, most likely. So we'll see.
Yeah, we do need to comment on JR abandoning us. It'd be easy to sit here and badmouth him, so we will. Like JR, as soon as the stock starts going down, you give up. So I admit I put in my stop, but JR just abandoned us altogether. Very sad, JR. Okay, all right. I want to switch to kind of a random topic. Somebody said something, I don't know where, but it made me think about, will you guys ever just stop trading in the middle of the day because you've either had a really bad day or a really good day? Is there ever a point where you just say, all right, enough, time to move away?
If I can start, I would say yes, absolutely. You're a professional. Your job is to limit losses, but also your job is to maximize gains. So if you're feeling it and you're on fire, it would be absolutely idiotic to stop simply because you got to your target of $5,000. Then you would never have those $50,000 days or whatever it is. So I think it's really stupid. But at the same time, what if you get to your goal of whatever that number is, $5,000, and then you start giving back? So I think you have to use a trailing stop. So if you get to your goal, don't give back more than, let's say, 80%. So you lose once, twice, call it a day. But if you're losing, of course, whether you might have to stop an hour into the day or 30 minutes, hopefully not. But I mean, you might have to call it a day really early on to limit the losses, especially on days when you're not feeling well. You can tell you're revenge trading. You can tell you're doing something wrong. It's just best to walk away. It's just best to walk away and think about trading in terms of as a long-term endeavor, business, not a short-term sprint. The most critical thing to always keep in mind is if you run out of money, there's no more trading. So you always want to have that in mind, so that when you're having bad days, it's okay to have bad days, but they can never turn into super ugly days, disaster days. Then you're a novice trader. You're not a professional.
All right, Derrick, what do you think? Is there ever any eject button if things are either going?
First of all, I echo Sami's sentiments entirely. I do not believe in upside P&L limits. I never stop on the way up. My business is to maximize reward while minimizing risk. You're never going to have a $5,000 day if you stop every time you're up 1,000. You're never going to have a $50,000 day if you stop every time that you're up 5,000. That's how it works. So I always want to push the upside. Personally, I tend to trade much less in the middle of the day, just period. Tend to. It varies depending on the day. Sometimes, some days there's a lot more movement and opportunity in the middle of the day, but some days the market doesn't do anything in the middle of the day. And if the market's not doing anything, then I don't want to just churn my account away. And I've seen statistics of traders that I work with over the years that show that their lowest P&L period is between 11 and 2 on average. That tends to be the period, based on the data that I've seen, where traders are giving back more P&L than they're making. So if there's no advantage, then you need to know when not to trade. And that's a huge part of the business is preserving capital. But sometimes, the market's really in play. There's big events. I mean, remember April a year ago? Those are the days where if you're doing well and your P&L keeps moving higher and the trade setups are presenting themselves and you're not just flatlined in the middle of the day going sideways, where, you continue to trade and you continue to push it. And for myself, I basically always have open positions with active game plans, and I am always going to be managing the positions that are open, even if I'm doing less in terms of new positions in the middle of the day. And the final thing I want to say on that is just building off of what Sami said, which was some really good advice. I have analyzed my own account over the 16 years that I've been trading with T3 and countless other traders' accounts in trying to help and mentor them. And there are certain things that stand out that are always the same between traders who are successful and those who are not. It's really going to be this simple. Tell me what your maximum loss is, and I'll make a very simple number. Your daily maximum loss is $500. Let's keep it easy. If I can go in to your account at the end of the month and look at your P&L day over day for that entire month, and you can show me that you didn't violate your maximum loss a single time, every single day that where you had a bad day over the course of the month, it is stopped at no worse than that negative 500. And then you just give me 2 or 3 outlier days on the upside where you made $1,500, $2,500, $4,000. I will show you a trader who's making money every month. That's what it comes down to. It comes down to bigger picture P&L management is the key to success. And it's so hard for us as human beings because we have a recency bias. We don't like to take losses. We always want to win. Every trade that you're in every day is always the most important trade that ever existed to you. And in fact, at the end of the month, that trade doesn't matter unless you allowed it to matter by having a massively outsized loss. So you show me a trader who's just hyper disciplined on that downside every single day. Give me a couple good days a month. That's all you need to do to really make money in this business.
Okay, so Derrick, so do you find that a lot of people are screwing their month up through like 1 or 2 bad days they get out of control?
Sure. So the flip side of that is I just said, if you stop at your maximum loss every day and give me 2 or 3 outlier upside days, you're making money. But if you now take that same trader who has 2 or 3 outlier downside days, that person is losing money. If your best days you make $2,000 and your worst days you lose $2,000, you're going to lose money every single month. That's just how it's going to end up working. So it's those seriously, couple days in a month where the discipline went out the window because you were hungover or mad or fighting a trade or whatever it is that will destroy your entire month.
And the funny part is, if you talk to traders and ask them how often they have their worst day of the week or their worst day of the month following their best day of the week, best day of the month, you'll find it's very, very common because we get complacent. So, if you're having amazing days, don't get complacent. That's part of the discipline is to stay focused and to not get emotional, up or down. That's what makes trading difficult is the psychology, the P&L, whether you're making money or losing money. If you're letting it actually impact your psychology, it's just making you a much worse trader than you actually are. So rule number 1 is don't let the P&L basically change your psychology. That's really, really important.
I feel like this is really where we need AI. Like if it can spot your mistakes before you make, because I feel like this could be, there are parallels in everything in sports. Like if you're playing basketball and, when you're shooting, let's just say, you put your elbow a funny way, and whenever you do that, you miss. Like there has to be something similar in trading, because if people have those patterns, this is what I want, and maybe this is a better question for Derrick, but for the average trader, if you could remove their 10 worst days of the year. So instead of like being mega losses, those days are just small losses or even flat. Like, how much does the P&L change based on that? Just by removing like the 10 worst days.
I find that very often being able to eliminate those 10 worst days in the year or those 1 or 2 worst days in a month is all the difference for a large percentage of traders who lose money to be profitable.
Even the market, they say, you know, if you eliminate like the 10 worst days of the, or if you're not invested in the market on the 10 best days of the year, the S&P 500 actually loses money. Something like this. So it does make a huge difference, but it depends, you know, it's different from trader to trader. It depends on the trader basically. But most of the time, yes, you remove the 10 worst days and that trader is actually profitable most of the time.
All right. Okay. All right. Let's move on to ideas. So it's almost lunchtime for me. So let us close out with ideas. So who wants to step up?
I don't have a lot of ideas. I gave, that NOW that we talked about a couple of days ago, pretty nice move already. So it's kind of late, too late. I liked it a lot. Right now, the ODD, it's odd, ODD, looking higher, but I would, if you're not in it already, I would wait for Monday until Monday, and then over 1420. I like higher, but there's not a lot of ideas because the market, they're either too late or, I'm not pulling up my charts, I guess. And your charts are really ugly, like Derrick said.
What's so ugly?
Oh my God. Let me see. I need to like go full screen. Yeah, actually not too bad. Yeah, this is not too bad. Yeah, it's not too bad. Not too bad. I take it back. The ODD is like the KD that I mentioned last week. KD. So it's similar concept. Right. But you can't let it take out today's low. So that's the thing. See that? That was mentioned last week. It's a gap fade type of a trade. So the ODD cannot take out today's low. If it does, then it would be no good, which is 1330. So that's just an idea that already triggered for me. But we do this live stream once a week, regardless of regardless of how the setups are looking. Let's see, anything else that looks good at the moment? There's a couple of shorts, right? Mostly late, but look at Light, LITE. Check out Light. That's just like SanDisk. Look at the WDC also. That's a short, just like SanDisk. If SanDisk drops, I assure you WDC is going to drop too. Where's the short? It's under that red bar from a few days ago on the WDC. Yeah, exactly. Under that bar's low. Where's the stop? Above the next bar's high. That's the stop for it. So they either all work or all fail. But I like the Light short. I like SanDisk short. I like the WDC short. There's a few more just like them, but they're too late. Like the GLW. It's too late. Check it out. Same exact concept. Climactic on the weekly. Check out the weekly, the monthly. Yeah, zoomed in a little too much. Right. Look at the monthly. So those are a little too late, but the Light is not too late. The WDC is not too late at all.
All right, perfect. Thank you, Sami.
Of course. And then, by the way, USO is doing a 1, 2, 3. Oh, I mentioned it in the room while we were talking, but it already popped. Was doing a 1, 2, 3 setup long on the 15-minute chart, but already popped.
It's going up more?
It's going up more.
Wow.
Yep, up 13% now. So on my side, first of all, it's market short for the short term, which we were kind of talking about earlier. I'm really, really watching to see where we close today for the SPY. If we close above 676 today, I don't like it. I want to close below 675 honestly, to feel comfortable to press the short side. We're currently beneath that right now. So I think that it's okay, even here intraday, to try to press the short side versus the intraday high. If we make new highs, if we close above 676, like I just said, then the idea is wrong or not ready, and just get out of the way and wait for it to reset up, because we keep bouncing back so well. But a close below 675, I think, is enough to get this thing going. And then if we lose that 670, which is this morning's low and Tuesday's low, that's, I think, where we get acceleration down to the 200-day. So it's the first thing I'm watching. But we'll see where we close today. And a lot of what I'm doing is always going to be initially based off the indexes. If I had to be long something, or next week I'm starting to look for longs, they're going to be primarily NASDAQ related. I'm going to be looking to buy some Mag 7 names, some NVIDIA, some Google, not Tesla, some of those types of names. That's going to be the best bang for your buck. Maybe Microsoft, maybe software can continue, but don't chase it. A lot of the software trade is done now at this point. Oil for the bigger picture short, but kind of went over that one already. You need the signal to come in. It's starting to go extremely power. I mean, Sami is still calling out momentum long trades, which I'm all for that for traders who are on that time frame. And obviously that 1, 2, 3 play on the 15-minute chart just worked out well, as this thing consolidated all morning and then broke up. But the daily chart extension in oil is becoming unsustainable at this point. So I think it's close. Impossible to time something that's still making highs and is still on the way up. But looking for a signal, or again doing like a very slow build-in process if you can afford it, is something I'm for. And in some ways, being short oil acts as like a little bit of a market proxy long, which you have to keep in mind if you're managing like a portfolio of positions. I've got 28 positions on right now as we're having this conversation. I think that EEM is starting to become interesting for a counter trend long snapback trade. I have a very small feeler position on right now, but hasn't really gone deep enough for me to want to take any real size on it. I think that if Jets could accelerate to 24, which is some support from November, and be really extended into that 24, that would be a support extension combination trade that I would look at if it can get to those prices. So that's where I'm at.
Okay, I'm sure. Well, there's over 3 hours left until the close, which seems a little crazy. It feels like anything could happen.
True.
All right, everybody. Oh, okay, everybody. Thank you for joining us. If you're holding stuff over the weekend, good luck to you. It's going to be fun. So all right. Last random question. What are the odds where you open up to oil over 100 on Monday?
It's a possibility for sure. If that were to happen, if we had another, like, where are we at? Like 90 now? If oil gapped up like another 10% or plus on Monday, I'll be probably hammering it short into any intraday down move at that point. That I'm giving, I said it earlier, like I'm starting a very, very small oil feeler short that I'm not afraid to build into, but I'm small enough that I'm going to be comfortable to size up and put real size on if I see USO get to 125. So if I see USO gap up 10%, then again, that's going to be something I'm really starting to layer into. I think that the higher probability, honestly, is that today's move is kind of trapping in some final longs, some final bulls in front of the weekend. And then if nothing happens dramatic over the weekend, then you get a big gap down on oil, and most people are going to miss the trade, which is why I am building into some really small, because we could very well actually have a large gap down on Monday, and then no one's going to capture the trade unless you had the tenacity to take a little bit of oil short over the weekend. But again, if you're doing it, which I'm planning on doing it, you really just need to make sure that your sizing is appropriate. If you tell me that, hey, Derrick, my account's going to be blown up if USO's at 125, you don't belong in the trade. You have way too much size.
All right. Okay, everybody, thank you for joining us. Hopefully JR will feel better next week, and he'll be with us. Unfortunately, he is sick. JR, get better, buddy. We are praying for you. All right, everybody have a good weekend.
Thanks, Mike. Thanks, guys.
Have a good one, guys. See ya.